Today, we are going to walk through 6 key policy changes that 2025 Liberal Party platform has released in a clear, very easy to understand way. Policy change number 1. The 1% income tax reduction. So something that always get attention for any political party is tax cut, right? So the Liberals have proposed to reduce the lowest federal income tax rate bracket by 1% reduction from current 15% down to 14%, which means this would apply to income up to $57,375, and this change is proposed to start from July 1, 2025. Now the idea behind is to help you keep a bit more of your hard-earned money. And that sounds like a straightforward win, right? And for many, it will be a straightforward win. The Liberal Party suggests the change could save a typical 2-income family up to $825 annually. Now that's a good welcome news. But there is a little wrinkle we need to talk about, and especially for retirees. Now it's important to know that many non-refundable tax credits, which are the legal way to reduce what we owe to CRA. For example, like basic personal amount, the age amount, the pension income amount, and even the medical expense tax credit. They are calculated using that lowest tax bracket and the lowest tax bracket rate. So, when the tax bracket drops from 15 to 14%, the actual dollar value of these credit also decreases. And it doesn't decrease by just about 1%. It will decrease by about 6.67 percentages. So now, what does that mean in a very simple term? I'll tell you. This means the net saving from the tax cut might be less than the initially what we think. Particularly if you claim several of those federal tax credits. It's something to factor into your planning, right? Now let's look at the policy change number 2. It's cancellation of capital gain inclusion rate hike. So this move to something generally good news, and for those who has substantial investment. Remember all the talk about increased capital gains inclusion rate some time ago, and the proposed rate hike has been officially cancelled now. Now what does this mean? The portion of our capital gain that is taxable will remain at the previous level of 50%. Now, those planned potential gain over $250,000 a year at the higher tax rate bracket of the capital gain calculation, which has been announced, has been totally cancelled. Now, this implementation is a great news for providing stability if we have non-registered investment account, or if we are planning to sell asset like secondary property in coming years. Basically, it makes our planning a bit more predictable, right? Earlier, because of the confusion and sudden rate increase for capital gain inclusion rate, there was a lot of instability and there were a lot of changes happening into the future planning. Now let's look at the policy change 3, which is increased lifetime capital gain exemption, also called LCGE in accounting terms. So, same sticking to the capital gains. This is a very good positive news as well. The lifetime capital gain exemption, which is specially for the businesses, also called LCGE, for those qualified small business share, qualified farming and fishing properties will be maintained at the increased level of $1.25 million. Now, this increase was effective June 25, 2024 itself. So, if you are an entrepreneur looking to sell your business as part of your retirement plan, or if you own the specific type of assets, this includes exemption would mean a significant reduction or even elimination of total capital gains on the sale of assets. Let's look at policy change number 4. Temporary reduction of RRIF minimum withdrawal. So what is RRIF? Registered Retirement Income Fund, or RRIF. So the Liberal Party platform include a proposal for 25% reduction in the minimum amount you must withdraw from your RRIF for at least 1 year. Now, this is designed to give more flexibility, especially if the investment markets are a bit turbulent. It allows you to keep more of your capital invested and grow tax deferred, and can also help with the planning for taxation of particular year. Now, we have seen similar temporary measure in the past as well, like in 2008 and also during 2020. So the key thing to remember is that it is a temporary 1-year measure. We are still waiting on the full clarification for which year it is going to apply, like it will apply for 2025 or 2026. And the rules around recontribution, if you have already taken out the amount more than the new reduction limit, is also still uncertain and unclear. Now let's look at policy change number 5. It is again temporary. A temporary boost to guaranteed income supplement amount, also called GIS. So that's a good news for lower income seniors. This proposed temporary 5% increase to GIS for 1 year. So this could provide up to 652% in a tax-free income for those who are eligible. Now this is a direct financial help for essential cost of living increases, right? So this is a direct cash benefit. But just like the RRIF, this also is a temporary boost and currently planned for just 1 year. Now let's look at the policy change number 6. It is automatic tax filing. So finally, the government has planned and proposed to simplify tax filing by introduction of an automatic tax filing. Now they are going to start in phases, and this will start with a simple tax filing like low income household and for seniors. Now the goal here is to make the tax filing process easier, crucially to help ensure that everyone, including retirees and seniors, automatically receive all the benefits and tax credit that they are entitled to. For example, like GIS and GST credit, without having to navigate complex forms and tax filing. Remember, many of eligible government benefit persons are unable to receive it because they did not complete or they did not file their taxes on time. So this problem is going to go away. So let's quickly recap these 6 key points. For those who are planning for retirement, are already retired. 1. A 1% tax cut, but be mindful the impact on your non-refundable tax credit can reduce those benefits. The capital gain tax hike, is off the table. So the inclusion stays at 50%, and the lifetime capital gain exemption is generally on $1.25 million for qualifying small businesses, including fiction property sales. There's a 25% reduction in RRIF withdrawal for 1 year and 5% GIS for eligible low-income seniors. And another major change is automatic tax filing is coming to help to simplify so that people get the benefits on time. So these are some pretty significant changes. Some offer clear financial advantages. Now, I love to hear from you. What are your initial thoughts about these proposals from the Ribble platform? How do you think it will affect you and your retirement plans and your current situation? Drop a comment down below. Let's get the conversation going. And if you find this breakdown and the video helpful, please like and subscribe to my channel. Understanding these changes is the first step to making informed decisions for your financial future. Thank you and have a great day.